Hello everyone, my name is John and welcome back to my channel. In this video, we're going to be going over why Bitcoin is at a major support level and Ethereum is at the exact same major support level. So make sure you stay tuned until the end of the video. I first want to begin with one of my favorite timeframes on Bitcoin, which is the weekly time frame. As you can see, through this area here, we've actually been in a trading range and Bitcoin failed to break out below this trading range. And now we're looking to actually retest the top of this trading range and potentially go higher. This was initially a really strong support level and we tried to break below it. But using this exponential moving average as a support from the bottom side and seeing that we're actually in the bottom end of this trading range, you would know that when we're in a trading range, you want to be selling high and you want to be buying low and you want to be scalping on your trades. If you've also been following me for a while, you would know that I love to trade this one-to-one measured move pattern, and you can actually see a one-to-one measured move right here in Bitcoin. You would know that I only use trend bars when I'm calculating the one-to-one, which means these type of doji bars, when there's a massive wick on the bottom or top side, I do not include these bars. I'm only including bars where 80 to 90% of the entire bar is basically the full body of the bar and there's only a tiny wick on the top or the bottom side. These are all still trend bars. 1, 2, 3, 4 bars right there. Although they do have tiny little wicks, these are all trend bars to the upside. To actually calculate this one-to-one, I start at the bottom of the first trend bar and I actually drag it all the way to the top of the body of the last bull trend bar. You can see I've got a one measured move, and now what I do is Control Z, Control V, and now I have a second one-to-one measured move. And what I actually do is extend that exactly from the top of the first measured move and extend that up. And you can actually see this is where we have now our new target. We have a target right now at $34,000 per Bitcoin, which is still very, very valid. Because of this rising exponential moving average, we're going to use it as support and then look for another trade to the long side. So not only have I got the exponential moving average telling me that yes, we have a high probability that we're trading to the long side, but I also have my special one-to-one measured move strategy actually showing me exactly where we need to look for targets, and that's showing $34,000 per Bitcoin. So from this level right here, we would still have over a 25% profit on this trade. And especially if you use a little bit of leverage, this can easily turn into more than 100% profit on one single trade. A lot of people like to begin trading on the 5 or the 30-minute time frame. I really like scrolling out to the furthest time frame for me, which is the 1 week, and actually seeing what areas we need to look for trades and where are we trending. You can see that the exponential moving average, the one-to-one measured move, and in general, we're just having a lot more strong bullish bars than we are bearish bars. All of these bars are quite big and really strong, but when we do have a little bit of bearish momentum, they're quite small bars and they're only traveling slightly to the downside and then quickly reversed by these big bullish bars. We're being signaled by the market which way we need to trade, and that's regardless of if we're trading on the 1 hour time frame, the 30-minute time frame, or the 5-minute time frame. It's showing us that the high probability trades are actually going to the long side. If you haven't already, make sure you like the video and subscribe, as I'm releasing trading content every single day. Scrolling into the daily chart, it's easy to see that the EMA is moving in the sideways direction. We do have small downside, small upside, small downside, but you can see right here we're actually beginning to move to the upside with some strength. The MACD indicator is actually ticking to the upside. Before, we did have a lot of bearish momentum, continued bearish momentum to the downside, but these white bars are now signaling that that bearish momentum could be over and we're looking for trades to the long side. In this area right here was a very strong support level. Initially, this was a resistance. Once this resistance level does get broken through, we had a failure, and then through here, we actually cracked above that resistance level. When a resistance does get broken through, it then gets flipped to a support level. Seeing right here, this level was initially resistance and now it's acting as a support. We had strong support through here. We did have a bit of a crack, but there's still some really strong supports right along this area. And you can see that we never actually broke below and held below. We had this daily bar that actually broke this area, but never stayed below for very long. We were able to close back in this support area, which shows us that the bearish momentum is fading, and it's fading very quickly. Now on the 4-hour time frame, here in this area, I've been signaling for you to get to the long side as there's been a clear MACD divergence in this area. Now let me explain. The MACD divergence, you can see through here, we had a really strong push to the downside, and the MACD indicator had a really strong push to the downside. But let's look through here. We actually had a higher low in terms of the MACD indicator, but we had a lower low in terms of price, which means that we're now in a divergence pattern. The clear indicator to actually get long was when this first high low then began to actually tick to the upside for the first time. So you can see right here on this first white bar, it began not ticking to the downside. We then began ticking back to the upside. So that means right on this bar here was our entry to get long, and the market was signaling to us, get long and get long quickly. So from that area, we had an easy trade already up 3.8%, nearly 4%, and it's going to continue higher. So not only were we in the bottom side of the trading range, which is trading range price action, you want to be buying low and selling high. So we could have been buying at the bottom end of the trading range. And not only that, we had this divergence pattern where we made a big low in price and we made a big low in the MACD, but then we made a lower low in price, but we made a higher low in the MACD indicator, signaling that the bearish momentum is fading and a lot more buyers are coming into the market than you would expect, shown in the price right here. A decent little area to get out of this long, especially when you're scalping, would have been a retest of this exponential moving average on the daily time frame. But you can see that we began trading through it. We broke through, we had that failure, and now we've actually cracked above this exponential moving average. Through here, we were all traveling to the downside on the EMA. Right through here, we're now traveling sideways, and you can see that the last few bars have begun actually ticking to the upside. Before I move over to Ethereum, make sure you have liked the video and you've subscribed to my channel. Ethereum on the daily time frame looks more bullish than Bitcoin is. The reason being is this bar right here, which then traveled below the support level, actually closed to the long side and wasn't a red bar. It is now a solid green bar. You can use it as a doji bar, and a lot of trading patterns would signal this as a hammer signal. When we're in this trading range pattern, you need to be buying low, selling high. Buying low, selling high. And right now, which area are we in? We're in this bottom area. In the long term, it's always going to be a more profitable buy in this area than it is a sell. The reason being is we've had trading range price action lately. The EMA is not traveling to the upside like it was through here, signaling that buys are going to be the high probability trade to the long side. Through here, the EMA has been moving sideways, which means you can buy and you can sell. But if you're going to do either, you need to be selling high, you need to be buying low, and you need to be scalping, as that's what trading range price action is doing. Because if you bought in this area and you were holding, thinking that we're going to make a complete new high, you can see every single time it's failed, failed, failed. So you need to be seeing what the price range, trading range action is actually doing, and then using that to your advantage, knowing that we're not just going to instantly rocket to the upside just yet. You can easily make 3 to 5% on the long side, 3 to 5% on the bottom side, 3 to 5%, 3 to 5%. And by the end of the week, you've made over 20% profits on these trades, while other people are either holding their bags thinking, please, 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 go up, go up, go up. You don't need to be thinking like that. You're trading, you're trading, you're trading, and you're getting in and out. You're scalping because it's trading range price action. The best strategy is to buy low in this area, shown by these bullish bars beginning to now tick to the upside. And when you also look at this MACD indicator, we were bearish for quite a many days. 1, 2, 3, 4, 5, 6, 7, 8 days in a row. We had continued bearish momentum to the downside all through here. But what's happened on the last 2 days? We've had a tick up and another tick up, which means we're very likely now to push up on this MACD oscillator, come back to this zero line through here, and then continue higher, making bullish pushes to the upside, which would then be shown in price. We'll be making higher highs and higher lows. Now coming over to the 4-hour time frame on Ethereum, I can see another divergence pattern. Through here, we had quite a strong bearish push. Also signaled through here, which shows that the bearish push did have a lot of volume, and it looks like we could continue lower. But We then had this push right here, which created a higher low on the MACD. This was a lower low, this was a higher low, but look at the price. The price actually made a lower low, whereas the MACD indicator was making a higher low. So we have that divergence pattern showing us that we need to get long as soon as the MACD indicator stops ticking to the downside and then begins ticking to the positive side. So you can see right here, we had many days where we were traveling down to the bearish side, shown through the MACD indicator, meaning that there's a lot more bearish momentum and a lot more bearish volume going to the downside than there is bullish. But as soon as this breaks now and it changes to this white bar, it signals to us that the volume is beginning to change. Rather than had that continued bearish momentum to the downside, it's now looking like we have bullish momentum that's coming from the bottom side. We have that divergence pattern. We have the trading range pattern. On the long-term time frame, like the weekly, we have the exponential moving average that's acting as a support. We've got multiple confluence levels, which is exactly how I want to trade. So right on this bar right here was the entry point, signaling to us with the first tick up from the MACD, signaling we need to get long and we need to get long quickly. So in this area, if you had bought and you're still holding, again, you'd be up 3.5, nearly 4% on this trade. So an extremely profitable trade and very easy to get in. Your stop level would have been right below this bar, which was a 1.5% risk, and you'd already be up 3.5%, more than a 2-to-1 risk to reward ratio, which is exactly what we're looking for in trading. We're looking for 2-to-1 risk to reward ratios that we can just continuously take. In the long term, we're going to have a profitable trading strategy using a 2-to-1, using an exponential moving average, using the MACD, and using all of these confluence patterns together. Then we have a really solid trading pattern saying, yes, we need to begin buying and we need to get there quickly. Through here in this MACD indicator actually ticking to the upside, that's showing us that there's a lot of volume in the market, but there's a lot more buying volume than there is selling volume because we're at the bottom of the trading range, because we're using the exponential moving average, and because we have that divergence pattern showing us, it's all signaling we need to get long and get long quickly. But we haven't completely broken out of the trading range. Because we are in the bottom side of this trading range, it looks like we potentially could come back up and retest the top side of this trading range, which would be in this area through here. We've got this high, we've got this high, we've got this high, this high, this high, this high. This right here is a little bit of an outlier, and you can see a lot more levels through here actually having the true level at which I think price is going to come and retest. We're going to come back to this level at about $19,000 per Ethereum, which from the bottom side to this trade all the way to the top side is basically 10% profit on that trade. Holding it for just a couple more days is going to show you we move from the bottom side of the trading range all the way to the top side. Easy done. If you've enjoyed the video, leave a comment below on your favorite part. And if you'd also like me to go over this bearish and bullish divergence strategy on the MACD indicator, leave a comment as I'll create an entire video just dedicated to that. If you've enjoyed the video, make sure to like and subscribe as I'm releasing trading content every single day.